you see in Japan, buying or selling of foreign bonds is exchange market intervention, and intervention is, Bank of Japan only act as agent for the Ministry of Finance as far as foreign exchange transactions, buying and selling of foreign bonds are concerned. So, so it's basically exchange rate policy, exchange market intervention are done solely by the Ministry of Finance.
Yeah, so I know these laws, so it wouldn't, if you put it inside monetary policy, it still would not work.
You see, I just would like to know what is the purpose of buying foreign bonds.
No. Larry Summers brought it up.
To reduce interest rate in foreign countries, or to appreciate foreign currencies against the yen, and then, of course, as I said, exchange rate policy, exchange market intervention are done by the Ministry of Finance in Japan. Yeah.
Governor, I wanted to ask you about banks. Yeah. All right, because we there was a lot of talk that banks were hurting because of this move into negative rates. What lessons have we learned, if anything?
You see, always we carefully monitor the financial intermediary functions of the banking sector. And in the last 3 years, Japanese banks enjoyed historic high level of profit. And Japanese banks are well capitalized. And we continue to provide ample liquidity to the market. So capital is appropriate and enough. Liquidity is ample, and profit situation is very good. Now, of course, going forward, since interest rate spread is declining. Lending rate is declining, and deposit rate is already close to zero. So the interest rate spread continue to decline, and that could affect the banking sector profitability in the long run. So we will carefully monitor the situation, particularly its impact on financial intermediary function. But at this moment, even after the introduction of negative interest rate, banks' lending attitude has not been affected. Banks have been very active to lend to the real economy. So financial intermediary function has not been negatively affected at this stage, but we will carefully watch the situation.
Governor, I know you have to go, so one last question.
Yeah.
If you look at the markets, do you think that there's something that they misunderstand in what you're trying to do, or that they misprice? Do markets understand exactly what the objective is?
I think when we introduced negative interest rate early this year, initially the market didn't respond so quickly because it was new and it was unexpected. But gradually the market has adapted itself to the new situation, and as I said, the financial intermediary function continue to perform quite well. Now, after the introduction of the new framework, with inflation overshooting commitment and yield curve control, I think market has been well understanding the content of the new monetary policy framework. And I must say that response from the market has been quite benign, and the economy is continuing its moderate recovery. So at this stage, I think the new monetary policy framework is well understood and well accepted by the market. But of course, market can change. So we will continue to communicate with market people, economists, and so on and so forth continuously.